Over the past couple of days, some very interesting connections have come up between Quant and Hbar in relation to Blackrock, the largest asset manager in the world. In today's episode of the Everything Crypto Show, we're going to break down exactly what these connections are and what this could mean for the price action of these two altcoins. Now, before we hop into the content, just a friendly reminder that I am not a financial advisor. I am simply here for your crypto news and entertainment purposes. And if you do enjoy the content, please consider hitting that sub and like button and turn that notification bell on so you can be notified when all of our latest videos go live on the channel. So we're going to get right into today's two altcoins of discussion, and we're going to be speaking about both Hbar and Quant, as some pretty interesting things have come up for these altcoins in relation to Blackrock. And that is a very big deal. If you don't know who Blackrock is, they are the largest asset manager in the world. As of 2023, they had a record of 10.01 trillion US dollars in assets under management. And if you are in the cryptoverse, you've probably become more familiar with Blackrock as of recently, as the launch of their Bitcoin spot ETF. Pretty much around the time that they were looking to have the spot ETF approved, Bitcoin was at 25K. And as of right now, it's sitting above 60K. And I do think that a lot of that run up was in anticipation of the Blackrock ETF coming to the market, because now institutions all have access to Bitcoin through this ETF, which already has $18 billion in assets under management. And Blackrock has said that this is basically the fastest accelerating ETF that they have ever had, showing the institutional demand for Bitcoin is really, really high. And I do expect this to also funnel into altcoins down the road. Now that we kind of have a little bit of context on exactly who Blackrock is, you know why it is such a big deal for any altcoin that they select to potentially hold some of their assets, to tokenize some of their assets. Because this means that if Blackrock is partnering up, or rather using and adopting any of these blockchains have the potential to capture some of the assets they have under management, which could potentially lead to trillions of dollars floating into these chains. And when you take a look at Blackrock's assets under management, that is no exaggeration. So it's kind of important to understand why this is such a big deal. And now we're going to get into the news for both Hedera, the news and the sort of like the connections that have been made between both Hedera and Quant. So we're going to start off with Hbar. And we saw this tweet come out on April 23rd. Today, we witness RWA history, and RWA stands for Real World Assets, as BlackRock's ICS US Treasury Money Market Fund is tokenized on Hedera with Arcax and Onera IO, marking a major milestone in asset management by bringing the world's largest asset manager on chain. This development builds on the growing portfolio of institutional RWAs on Hedera, with the Hedera Governing Council, Aberdeen, the UK's largest active wealth manager, tokenizing its flagship multi-billion-dollar MMF on Hedera last year. And this additional Blackrock MMF, along with existing offerings, are all available directly on the Arcax platform, as well as through connected networks available to professional and institutional clients. Through the tokenization of this additional money market fund, the best-in-class combination of speed, security, and low fixed fees of Hedera are further validated, and we look forward to welcoming in the next wave of global TradFi institutions to the network for RWA tokenization. Now, off this news, we saw Hedera go on a massive run from about 9 cents all the way up to 18 cents at its peak. So effectively, this thing doubled over a day on huge volume as well, might I add, right? If we actually take a look at the volume chart here, this is the biggest volume that Hbar has ever seen based on that news, okay? In peak bull run, we were looking at like 1.3 bill in volume, and here we saw 3.21 bill in volume. So huge increase in volume over the past, basically just when the news kind of came out. Now, if we take a look at the chart, which we will in just a second, you're going to see that Hbar did find resistance at a pretty key area of resistance if you go back to 2021, and we will speak about that in just a second. However, you may also notice that a lot of this move was then given back, as this coin pretty much fell about 30% after peaking at that 18 cents, falling down to about 12.5 cents. And this drop in price did coincide with Cointelegraph, one of the biggest crypto media companies, tweeting Hbar token price momentarily surged 96% as investors misjudged BlackRock's direct involvement in money market fund tokenization on the Hedera blockchain. So here is the official post from Cointelegraph, saying that BlackRock was only aware of the move on chain despite many believing that they were actively involved. The widely misrepresented April 23rd Hbar Foundation X post, an organization working with the Hedera community, shared that blockchain trading and infrastructure firms Arcax and Onera tokenized BlackRock's ICS US Treasury Fund on its network. So the video shared with the announcement seemed to suggest that Onera, Arcax, and BlackRock were partnered on the venture, and Hbar claimed it was bringing the world's largest asset manager on a chain. And they're basically saying that it was misportrayed, that BlackRock did this directly. So, I don't know. I mean, guys, overall, you can kind of tell from the initial post. I don't think the initial post was misleading. I think it says exactly how it reads. Arcax has taken BlackRock's Treasury Money Market Fund and tokenized it on the Hedera blockchain. And it was confirmed elsewhere on Twitter that BlackRock was aware of this move but not actively involved, and it's not a direct partnership with Hedera. It's more of a layered partnership. But as of right now, we know that BlackRock has tokenized assets on 2 chains, and that is it. The first one is Ethereum. The second one is Hedera. So I do still think that it should be perceived as bullish news. It did give back most of the gains here, but if we take a look at the Hedera Foundation, even outside of BlackRock, like there are some really big members sitting on this Hedera Council, okay? We are talking about Google, we got Dell, IBM, we got Shinhan Bank and Standard Bank, Swirls, ServiceNow, Ubisoft, Chainlink Labs as well, Telekom Deutsch. Like there are some really big companies here that are in fact sitting on the Hedera Council. And I do think that they've seen a lot of impressive institutional adoption so far. It does look like this is set to continue. And even though it is not a direct partnership with BlackRock, the fact that there is the second chain to launch a BlackRock money market fund or tokenize any sort of BlackRock asset is bullish for the chain, in my opinion. Now, we haven't actually spoken about Hbar in quite a while on the channel, or not as frequently, and to be honest, it's really just because I haven't had too much to say. I mean, we were talking about it here in 2022. We can see at its bear market lows, it did hit about the 3.5 cent range. Now, from the bear market lows that Hedera did put in, as of right now, it's up about 243%. So a really nice move from the token so far. And you can actually see at the moment that we are getting rejected, or rather we did get rejected already here at a previous area of support, which is the 17 cents level. Now, 17 cents, most importantly, in my opinion, it acted as resistance here for a week before Hbar made its first run up to highs at about 38 cents. And then it acted as support here in July of 2021 before Hbar went on another rally here of about 250% up to the 58 cent mark. And now it is getting rejected here as a level of resistance. So I do think that this is going to be the big area to get above at the moment, 17 cents. And if it does, the next area I am looking at is the 25 cent level, which I think is going to be really important for Hbar, as that is basically where this coin got rejected in 2022 before we saw this mass capitulation in the markets that led to about an 85% drawdown from that level. Now, I do want to talk about Quant as well, as we actually saw a Securitize quoting Gilbert Verdian. So Securitize says here, banks see the need for programmable payments today. It's quite a game changer for them because business models can operate in a more efficient way. And the article that they are actually citing is the UK Finance article that talks about their regulated liability network. Now, the regulated liability network, or the RLN, is basically looking to use a shared ledger for tokenizing assets. They're working with Barclays, Citigroup, MasterCard, and Visa, just to name a few. And the technology team of R3, Quant, DXC, and Coadjute, I don't know if I'm saying that right, but it is being heavily theorized that the shared ledger they are building on is the Quant overledger, mainly because they have cited Project Rosalind quite a bit, which did use the Quant overledger for tokenizing assets. And then we see Securitize quote tweeting this here. Now, this is relevant because BlackRock actually filed with the SEC to offer a fund with tokenization fund Securitize. You guessed it. And here it is on their official website. So BlackRock today unveils its first tokenized fund issued on a public blockchain, the BlackRock USD Institutional Digital Yield Liquidity Fund, or BODL, I don't know how to say that. BIDL will provide qualified investors with the opportunity to earn US dollar yields by subscribing to the fund through Securitize markets. So basically, Securitize is working with BlackRock, and we have them now quote tweeting Gilbert Verdian, the Quant CEO. Pretty interesting stuff going on here. This is a little bit more of a subtle connection, but one that I don't think should be ignored, especially considering how much work Quant has already been confirmed to be doing with central banks all around the world. Now, taking a look at the Quant chart here, excuse me, if we take a look at the Quant chart here to wrap things up, I do want to go ahead and kind of update you guys on this because at the moment we are still trading in this range, and on this most recent pullback we have actually gone below the bull market support band. Now, my outlook on Quant really has not changed. I am still waiting for a break above the $150 area. We did get this back test of the $85 level of support on the pullback that we saw in early April, and Quant has bounced back since then. If we actually take a look here, I mean, it's already bounced back about 30% from those lows, but we are still below the bull market support band, not yet out of this trading range. And I really think that once it breaks 150, that is when this thing will be off to the races, as all the sidelined money who has gotten impatient while Quant has been in this range, I suspect will be running back into this trade once it does break out of this zone, which at the moment it's been in for about 455 days, so under a year and a half, but still a really long time to be trading sideways here, especially when the market, most of the market anyways, has taken off. The overall market, Bitcoin, and a lot of the bigger and more well-known alts. So I do think that 150 is that key level to watch for this altcoin. And on that note, I hope you did enjoy the content in today's video. I hope you are all staying happy, safe, and healthy, and I hope to catch you in the next one. Peace out for now.